What's going on, everyone? This is George Khalife. It's episode 32 of Let's Grab Coffee. I'm here with Manny Padda, a good friend. He's a self-made entrepreneur who built his first multi-million-dollar company when he was only 26 years old. He's now the founder of New Avenue Capital, an investment firm that brings together financial, human, and impact capital for high-growth companies. Manny's super passionate about philanthropy and sits on several nonprofit boards, such as League of Innovators, which I'm a part of as well. Shout out to LOI. In 2016, Manny was named Canadian Angel Investor of the Year by NACO. I'm super excited, man. Thanks for being here.
Thanks, George, for having me on. I appreciate it.
Obviously, there's a lot to talk about, both on the investment, also on the entrepreneurial side. Quick question, just to get started. I'm kind of curious. How did you go from, the corporate side, which I know you talked about in one of your LinkedIn articles, but you went from the corporate working for a big company to all of a sudden making that shift. What was that for you, and what was your tipping point?
Yeah, I think it was a couple things. I think I always knew I wanted to work for myself.
Mm,
The goal of scaling up and growing versus climbing that corporate ladder. So I had understanding of that probably at a pretty young age of knowing what I wanted to do from a working for myself standpoint, not knowing what I wanted to do,
yeah.
which was the harder point. And then I think the real aha moment was when I was 26, I think, at the time, or 25 at the time, and I'd been there for 4 years or so, did my MBA, and I could tell that even though I was probably progressing at a high level, due to corporate structures, there's no way I could have been a partner at that firm for another 4 or 5 years, and how it operated. And so, that kind of pushed me out to do my own thing faster, I'd say, than what I was previously probably expecting to do, just because I knew the opportunity wasn't there.
Mm. Well, so many people listening to this, and I'm sure a lot of people have had this kind of dilemma, right? They're sort of stuck in the middle. They want to make that leap, they want to make that jump, but they don't know. And there's never a clear blueprint. I mean, you talk to entrepreneurs, and they say, obviously, you have to take a risk. And you have a great quote, which I like as well, which is, living a few years like most won't, so you can live the rest like most can't. But what
Yeah.
advice would you give for someone who wants to make that leap? Like, what's a good kind of rule set for someone?
Yeah, I think it's a couple things. The first thing is to really get a sense of what is your tolerance for ambiguity and risk. And if you have a higher tolerance for that, then what you can really do is set yourself up based on that. So if you have a high tolerance for risk, you can maybe jump out faster and just take it and see what happens. I was probably medium tolerance for
Mm.
ambiguity and risk at that time. And so what I actually did was when I left Corn Ferry to start my own business, I actually took a side job as well. I taught at SFU as a
Wow.
sessional instructor. And so that helped supplement my income over the first year while my business grew. And I know a lot of individuals who've done that. It's so easy nowadays to take your expertise and contract that out part-time. And if you can do that, whatever industry you're coming from, that gives you the opportunity to spend more time focused on your business and on the real parts. Because the worst time to make decisions on when you're doing your business is when you don't have funding. And so you want to make sure you always have funding to be able to make the right decisions for your business if you can. And so that's always important. So I think that's the key, is understanding what your tolerance for risk is. Like, are you okay with $50 in the bank account, or do you have some other obligations, right? Not everyone's able to do that. Do you have other obligations which require you to be making some sort of income while you're building your business?
Yeah, I love that. That's very good way to put it. Yeah, when
Yeah.
you were 26 and you were looking to start, your first venture, you went obviously on the recruiting side with PM Search Partners. How did you know that that's kind of the vertical you wanted to tackle, and what was it for you that made you self-aware of that?
So we should clarify, George.
Yeah.
26 was my first successful business, probably.
Okay.
Uh,
There we go.
I had about like 7 failed businesses before then.
Mm.
I joked around all the way from a lemonade stand on a highway, which was probably not the best location
Wow.
when I was younger, all the way to I was trying to do commodities trading. To I used to have a media company called New Avenue Media. That's actually where New Avenue Capital came from,
I see.
and that was where I was doing the washroom frames, just like New Ad was, but in second tier locations. And then I wrapped those up and sold it, not for a huge profit, but for enough to get me started. And so where I kind of decided to do the search firm was I had done all these other type of businesses, and I realized the heavy capital intensiveness that required to start some of the products that I was working on. And I realized that I looked at the fees of what recruiters were making and the fees we could charge, and I said, well, if I do this, that'll open the doors to me to do so many other things. And I built the model off of that to go from search to then investing, because Well, when you're looking at early stage companies, you really don't have a technology, a product, something tangible you can feel all the time. The only thing you can assess is the people. And so what better place to start from for me than from a recruitment perspective. And I wasn't recruiting for, lower level staff. It was all high level, senior, VP, board, C-suite. So you got to spend a lot of time looking through personalities and looking at how people operated. And so that gave me a leg up than when I got into the investing side. So even though I started in recruitment and that was my goal to build my business off of it, I never thought of myself as a recruiter. Thought of myself as a people connector. And that allowed me then to be able to move into entrepreneurship, because that's a business that was easy to disrupt and easy to start on its own. I needed a laptop and a phone and a suit. Right?
Yeah, that's very true.
And yeah.
Yeah, well, even your hashtag today, I always see it as bullish on people or long on people, and I love that. I love that kind of quote and that mindset.
Yeah, it's all about relationships, right? Like, and that's not saying that every single relationship I've had in business has been positive. There's areas where it just doesn't work, but I've definitely realized that I have a much better chance of success if I'm working with people who are aligned with how I think, how I operate, kind of from the values and relationship perspective, right? You're transactional, that's great. There's a place for you in the world, and there's businesses that require that. It just doesn't work very well with my business mindset and model.
Right. And talking about building a network, being bullish on people, what's your style of networking? How have you leveraged technology like LinkedIn? I know you're active on social now, and you're really adopting it well. But for someone listening, like how is your approach and methodology to not only building your network but also maintaining it as it grows?
So I wrote an article that's published on Quartz about 2-3 weeks ago that talks about how I don't network, and I don't believe in networking, but I believe in building relationships. And I think it just depends on where you're going. If you're going to an event that's called speed dating or called those things, that might be great, especially when you're starting off your career. I understand people need to do that. I was fortunate in that my job was full-time networking, but building relationships with senior level executives and people around the world. And so that was built into my job, which I know some people don't have right now, right? Obviously in their careers.
Right.
So if you're going to start with that, just try to find like-minded people, right, to be working with and connecting with. You don't need to have a Rolodex of 10,000 people. I find it really hilarious when I see people who tell me that their Facebook is now full of contacts that they can have as friends, or their LinkedIn is maxed out. Like, there's no way you actually have valuable relationships there. And I had started back in my career, I used to add everyone on LinkedIn, and very rarely do I add people now. I will add people back if I think there's a reason to, but I don't try to fill up my contact and network base. I've got a core group of 8 to 10 people I work with on different types of projects and deals. I've got a core group of friends, and I've realized just by segmenting and funneling that down, you end up being more efficient and more effective with what you're doing.
Yeah, that's a very good way of putting it. Even like statistically speaking, and even there's a lot of research done on this, Manny, and I'm sure you've come across this. But basically, like, you can only handle 150 close relationships at max, where they're actually quality relationships from personal to professional. And even, like, for example, I met you like 2-3 years back at TMX, and from then till now, just building that relationship through different initiatives that we were mutually a part of. So providing that context, to your point, is really important. Otherwise, it's just stale. Like, there's no substance there.
Yeah, and I'm not saying that's a bad thing. Listen, there are people you just connect with in business, and you can go out for lunch with once every couple of years or whatever it is, and when you see each other, you're happy. And I'm not saying that's a bad thing, right? I'm just saying you're exactly right. I think that number 150, I'm pretty sure that's the number of relationships a banking person at a bank can have before they split them off to new clients, because even banks realize that there's only a certain number of people that someone can hold before it gets too much for them. And so to me, it's just, build that funnel and do it right. And that doesn't mean cutting other people off, but it means understanding your priorities, right? And for myself, I've got 2 little boys, got my wife who's running her own successful business now, and so that makes time even more precious, right, in terms of who you're trying to work with and what you're trying to accomplish in a day.
And you talked about running into so many C-suite execs. Primarily, that's what you were focused on. Even when you were on the recruiting side, but as an entrepreneur. But now you deal with so many C-suites as well, so many leaders in the space, whatever vertical that you're covering. What's that? What's that common kind of trait or pattern that you're seeing from memorable leaders that you come across, and ones that you really kind of resonate with?
The ones that I find that I just am very impressed with are the ones that are very relatable, right? Like, one of them once, I remember sitting in a room one day, and I won't say the name of the individual, but he, he's definitely been very successful. And he was sitting in a meeting, and I was super young at this time, but people were just throwing out acronyms and all these things that I didn't understand, and I could tell neither did he. And all he said was, "Excuse me, can you explain it to me like I'm in grade 5?" And I just found that very interesting because he was so interested and so open. Like most people would just pretend like they know, but he was just so easily and wasn't afraid about being vulnerable there and very relatable. Like in terms of being able to talk, I always say all the way from the janitor all the way down to the C-suite and board. Having that ability to be able to move and mingle with people and understanding that I think is key. And those are the people that I find to be most interesting, right? Because to me, it's not a question of how you operate and how you act when you're just building off when you're starting, but it's a question of how do you operate and act when you've actually made it in some aspect, whatever made it means to you. And that relatability, that relationship orientation, the people that I consider successful, and for me, success is not just business. Success is your family, your friends, and your business. It's your personal, your health, your family, and business as well. Those are the people that I see. They're very relatable. They're very relationship oriented, and they truly care about other people's success as well as their own.
Right. Yeah, I like the way you can kind of contextualize the last part too, Manny, by saying success isn't just about your business. And I think burnout is very prevalent in entrepreneurship. And I'm like I love the hustle and the grind just as much as the next person. But to your point, there's so much more to life than just kind of a one angled approach. And
Yeah,
yeah.
but for some it's not, and for some they're not as worried about your friends or family. I always tell everyone, I said, figure out what's important to you,
To you.
and then focus on that, right? Like, and it's going to be different for every single person. For some people, it's more family than wealth. For some people, it's more wealth, etc. Like, and all I say is just understand what your motivations are and what you want to be doing, and then align everything you do according to that. It's a very simple thing to say, but it's very tough to implement.
Very true. Yeah, how do you go about doing it yourself? Because I do follow you on social, as I previously mentioned, and I know you're active and stuff. And I see that you prioritize your wife, you prioritize your family at large, your kids, and just having to deal with a huge portfolio now on the investment side. Like, how do you deal with it all and keep a good balance?
Yeah, I read a book a couple of years ago now by Randy Zuckerberg called Pick Three.
Okay.
You can do you can have it all. You just can't have it all every day. And what she said was there's 5 things in life that you can focus on. It's your family, your business, exercise, friends, and sleep. Every day, pick 3, and do 3 really well. And so for me, that's technically what I try to do is I don't today I left the house early and I've got a dinner event. I'm not going to see my kids probably for most of the day. I got to hang out with them a little bit in the morning, but I'm not. But all weekend long, it was all about my family and it was all about my friends and it was all about exercise. Um, today's been workout and work and sleep. And so every day I pick 3 and then I kind of over the week see how my weeks are going. And if things are tilting one way or the other,
Hmm.
then I move it to make sure I adjust, right? I travel 10% of the year. So that means I'm away from my kids and family 36 and a half days a year. And so you just have to understand what that balance is. The other thing I've done really well is I built a good team around me, right? All my businesses, the portfolio, I say I've moved more from investor into back to entrepreneur now because I'm working on a couple of businesses. And
Right.
that portfolio is doing very well on its own with an associate and a couple other individuals kind of managing it and seeing how it's going. And then I'm available when needed. And so having the right people around you and understanding what your balance is, how you want to structure it, whether it's pick 3 or pick 4 or try to do everything every day. But I found that doing those 2 things, having a good team around me and working on that pick 3 strategy has allowed me never to feel guilty. Right? If I miss my kids one day and I don't see them for a long time, but I know the next 2-3 days I'm there, I don't feel guilty, and I put all my effort into that work. I put all my effort into that workout. I put all my effort into that time with my friends. I'm present, and versus try to exercise while analyzing a spreadsheet, while WhatsApping and FaceTiming my children. Right? I mean, like there's no quality there. Right?
Yeah.
And so you want to make sure everything you do is quality and in the present time, and so that's kind of how I've structured it to make it work now.
I like that, man. I'm gonna definitely pick that book. It's interesting when you say like pick 3 because it's true. Like you only have so much time in the day, and to your point, if you want to give 100% as much as you can, obviously to every task you're doing, then
Yeah.
then you got to prioritize those things that matter to you, I guess.
And listen, I'm a big believer. Like I love multitasking. I have to do a couple things at a time. It's just how I operate.
Yes.
Leave that to when my brain works or whatever it is. But I've never worked well sitting there doing one thing. Like whether if I'm writing some emails or pounding out or having to analyze a spreadsheet, I need to be throwing a ball against a wall or something. Like it's just how my brain works. But to be still focused on the task, but have a secondary piece. So I call it primary and secondary. Your primary thing is your work, your family, your business, and if you're doing something secondary behind it, that's okay. But it's when you're trying to do two primary things at the same time, both fail.
And what would you say, because you have both sides of now, obviously being a seasoned entrepreneur, but you're also on the investment side, and I know you do both extremely well now, but which one would you say you prefer more, and which one do you think that you have maybe a stronger advantage in?
I base it, how I built my career is the first 3-4 years was pure entrepreneur. And then the next 3 to 4 years was more investor as I burnt out and I needed just to take a break from day to day. And now I've moved into entrepreneur. I'd say they blend very well together. And so I wouldn't say I'm better than one than the other. I would just say it depends on what I'm doing at that time. Like I know, for example, what I'm good at, what I'm not. I know as an investor, I cannot evaluate every single business on my own. But I know I can evaluate the people side and then bring in industry experts. Right? And as an entrepreneur, it's the same thing. A lot of people try to build a business on their own, and it's very tough to do so. And I've realized my most successful ones now, PM Search was great, but I'm working on a roll-up right now in the dental industry. I'm working on a project right now in the public space and launching a capital pool company with 4 of some of the top tech entrepreneurs in Canada. And I've realized by putting the right people around me, it's the same thing, whether it's investing or entrepreneurship. The only thing is with entrepreneurship, I'm spending a little bit more day to day on the vision and the strategy versus, I joke around sometimes about being a backseat CEO with some of the companies I'm an investor in or helping out on the back end and jumping in for a little while. So to me, entrepreneurship for me is just spending more time on the business than investor, but I focus on them the same way. And I think doing that allows you to be successful at both.
Amazing. And for someone listening, they might be an early stage entrepreneur, they're aspiring, and they're looking to raise maybe that angel round. What would you recommend as kind of just basic tips for them to get started on it, especially from seeing the successful ones that you've helped along the way?
For sure. First of all, research the people you want to meet, right? Okay. If there's companies that are similar to yours, who are the investors that were in that business, or who are the people that are in that space, who's in the industry, who invests? Like, I have a lot of companies sometimes that come to me and show me, hardware, capital-intensive businesses. I think every single podcast I always tell everyone, or every interview I've had, I tell them I don't invest in that space. And so I feel bad sometimes not, meeting the individuals, but it just doesn't make sense. And that time can be better spent, not just for me, but for them, right? And so I would say find people who are in that industry or who like that space, who have invested in that space, and then start with advice, right? A lot of people come with a deck, and all they have is a deck, and they want to build out, and then they want capital. But if you come with asking for advice, you get much more impactful opinions, ideas, and places to go versus just a yes or a no on a check. And that will be very helpful for you as you're building forward. And then every single person you meet, I always tell people, there's a rule I have. If you want to meet with me or connect with me, I tell everyone, usually you have to know someone who knows me. Unless you've met me personally at an event, I don't accept cold in-mails or cold email pitches for someone to show me their business. And the reason for that is just purely time. Last year, we got over 2,000 pitches sent to our inbox for New Avenue. We just don't have the time to go through all those. And so this is a way for me to kind of grade them and sort them out. And so having that ability to be able to sort through is huge. And so if you get referred into the person that you're talking to, you have much more likely chance of getting a warm conversation and a good conversation versus just cold emailing people. A little bit counterintuitive to what people say sometimes, just reaching out and spamming. But I truly believe if you could find someone that knows that individual and say, hey, I want to talk to this person because of this, just want their advice, and that person then makes the introduction, much more likely that person is going to respond and want to talk to you.
Interesting. And within that experience, just to flip the sword, and I know you said, kind of one of the things that you shouldn't do, but what would you say was the biggest mistake that you've seen an entrepreneur make, while trying to get you to invest in them?
The worst thing I've seen is when I tell them why I'm not interested, etc., or I dispute maybe some of the facts that are in their model or in their product, they get aggressive and angry. Happens much more than you think, and that just
Oh
shuts down
man.
the conversation right away. Yeah, where they're like, well, you don't know this business, or I know it better than you, and I always say, yes, absolutely, you absolutely do, but here's the things that I see, and for me, I think I said it in one of my last articles. If you're looking for money, it's okay to say you don't know the answer to something. Like I explain this in entrepreneurs all the time. You are not expected as an entrepreneur to know everything, right? You're in a new business, you're working on something, so it's okay to ask questions. I ask questions all the time, and guess what? You're gonna mess up and make decisions sometimes that aren't the most economical or aren't the best for you. But it's being able to be open and honest and vulnerable that's gonna make you a strong entrepreneur. So if you're completely closed off and you don't want someone's advice, etc., you're probably looking at the wrong angel investors, because angel investors are there typically to be smart money and to help you.
Yeah, that's very true. And I mean, it's strategic for a reason, right? Like you're putting money, but you also want to be there to offer your network, your support, your experience. And so you also want to find someone who's teachable, right? I mean, to the extent that you can provide that asset. So that's a very good
Absolutely.
point. And
Yeah.
one last thing on your side as well, Manny. I mean, you've had 23 exits under your belt, some as an entrepreneur, some as an investor, and I work in M&A. So definitely interested just to hear your take on exits in general. When because I often hear and I talked to Michael Hyde about this, and he said, which I agree with, the best businesses who do well just focus on growing and being successful, and an exit will come kind of as they are progressing. But obviously, there are certain things to think about, and you've highlighted this on an article recently. So, can you just touch base on that and what you think is
Yeah,
important?
you should never focus on your business for selling only. That's
Hmm.
the wrong business model approach, in my opinion. Just because then if it doesn't sell, you set the model incompletely correct. But you should always know what your options are.
Okay.
Yeah, you should always know what your options are. So at the very beginning of your business, you should. So here are the companies that would look to potentially acquire me. Here I could take venture capital money. Here's private equity money. Here's the options for going public. You should always know what your options are at any time and understand that, because the problem a lot of the times is entrepreneurs will build and grow the business, and that's great. But if you're growing the wrong metrics or the wrong numbers, that's also an issue. And so you always want to make sure that you're growing for the right reasons and not just for the sake of growing, and understand what you could do at each level. So when I work with all of my companies, I'm in the angel round or seed round or friends and family. At the next round, I always ask them, hey guys, what are the options? Hey girls, what are the options that you have here in
Hmm.
terms of what you can build out? Like, does it make sense to take VC money here? Should we do another angel round? Should we do a bridge round? Do we want to stay private? Should we go public? And, a lot of people are like, public, what? And, and I say it's just the option to look at that. Not saying you have to, but what are the pros and cons of each piece that you're going to do at every level? And that way, to me, that's proper due diligence on every round that you're doing, right?
Right.
Because not every business is set up to be VC capital intensive in 3 to 5 to 6 years exit. Some may be more M&A consolidation roll-up plays. And if you're going to do an M&A consolidation play, then looking public makes sense because you can use your share capital. And so when you're looking at your exits, there's so many options always. And so I always say you need to prepare for that, but you can't only look at that. If you're going to be going through an exit scenario with one company, you don't want to slow down your business and cut your costs and lean out so your margin's really high, but you're doing that to sacrifice growth because you think that company's going to acquire you. Because if that company doesn't acquire you, then you left yourself in a worse position. So
Right.
I always say be ready to exit, but don't focus your entire business on it.
On an exit, yeah,
Right?
and so many times, like, and I'm sure you must have felt this as well. Like, you get inbound interest from, say, a strategic or maybe a financial partner, and they show a lot of interest in your business. And entrepreneurs always have this dilemma: like, should I carry out this transaction by myself and just go with this one person, or should I launch a process and see who else bids for my company and what price I can get? That's often
Yeah.
a concern, right?
Yeah, and I think you should explore, but this is where your advisors should come in handy too, right? Like, a lot of those exits I've had, almost every single one, I'd say 90% of them, I have had the entrepreneur reach out to me and say, hey, Manny, these people are thinking of buying us. What do you think? And if you have a few very smart strategic investors on your team, they can very quickly snuff out and say, this makes sense, this doesn't. Hey, you might want to take a look at this here. Just to take a look at what's comparables in the market, let me connect you with this individual. And,
Right.
if you've been very smart, and I go back to that, right, smart investors to have on your board or on your advisors or just in the background, having those individuals around you is priceless.
Yeah, that's very true. Manny, last question for you here. A lot of my listeners are either students, just out of university, could be fresh grads. What advice would you give to someone right now listening to this, wanting to make a step in their career and really wanting to make kind of a legacy out of their future?
The first thing is if you're a student right now is take some swings. right? As a student, you're able to spend a little bit more time focused on your business activities or your student activities. So if you want to try, do some entrepreneurial competitions, try launching a business for startup. There's so much funding around for those type of things. Is to try take that swing to see what you can do, and that's going to be very critical. You know, as somebody who's looking to maybe start their own business, or as a student, leave the legacy you want, right? You know, I'm going to be president of EO Vancouver here, and we built a legacy, and legacy is our conversation and what our theme is. And I say, figure out what you want your legacy to be, whether it's your business, whether it's your family, whether it's yourself. Where do you want to focus on, and then drive your attention towards that. And that doesn't need to be right away, right? If you want to be an entrepreneur, but let's say you don't have the capital right now yourself, go find a job where you can work and earn some capital and build off and start your entrepreneurial career, or you can do a side hustle. You know, if you're fortunate enough that you've got capital behind you, then you've got a chance to take a swing a little bit earlier on. But always pinpoint and take that back to what you want your legacy to be. And that legacy can change over time. When I was in my early 20s, the goal was to make as much money as possible. Right now, it's changed. It's not only about capital, and so understand that can shift over time. What was that, sorry, George?
Well, I was just going to say, like, what would you say your legacy is now? I mean, just kind of that focus point for you.
You know, my legacy, I hope, is that I am an investor that is friendly to entrepreneurs, but tough when it comes to issues around ethics and corporate governance, and working on behalf of the good of the company. That's raised a couple really good kids, and is a supportive person who's been relatable, relationship oriented, and approachable throughout his career.
Amazing. Well, I really appreciate those insights, Manny, and I'm sure a lot of people listening to this will get value of it. So just want to say thank you. Thanks for coming on, and wish you the best in every endeavor that you pursue.
Anytime, George, and I'm happy to come on for you, man. I always love supporting young guys and girls who are hustling and building things, and really proud and impressed with the things that you started with so far. And thanks for supporting LOI.
Yeah, cheers, man. So big talk to LOI. Appreciate you, buddy. Have a good one.
Thank you, guys. Cheers.